a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about uranium ETFs. And uranium stocks and ETFs, we know that they have just gone insane over the past few weeks. Now, the recent frenzy in buying these uranium stocks and ETFs is this is driven mainly by Reddit's Wall Street Bets forum, which is very well known for the meme stock frenzy earlier this year, trading in stocks like GameStop, AMC. Another reason why these ETFs and companies are doing very well is because of a lot of buying of the metal by a physically backed closed-end fund, CEF, which trades in Canada. This is the Sprott Physical Uranium Trust, which I mentioned it is physically backed by uranium. So they actually buy and hold uranium. So they have been buying a lot. And uranium futures have surged about 30% this quarter. And companies which are involved in uranium mining, they have done even better because they are like leverage plays on the metal, like gold miners are leverage plays on gold. So these companies have done even better, and the two ETFs that we are talking about, one of them has more than doubled this year. Now we will take a look at those two ETFs. We will see what they hold, stocks. We will also talk about the supply and demand factors in the market, but I would like to warn viewers that this is probably going to be a very, very volatile space. So if you are interested in uranium stocks and ETFs, please be aware and please assess your risk tolerance before investing in these. So uranium is it is used mainly in nuclear power plants to generate electricity, and it is one of the cleanest ways to generate electricity, and that is why there is rising demand from China. China is actually the biggest market for uranium in the world, and also India, because these countries have to meet the rising electricity generation requirements and the climate change concerns. Then in Japan, the leading contender to become the next prime minister, Fumio Kishida, he said that restarting nuclear power plants was necessary to achieve net carbon zero goals. Now, nuclear power plants in Japan were largely shut down after the Fukushima disaster, which happened in 2011, and they have been slowly restarting. Now, the demand for uranium is expected to climb because of the factors that I mentioned earlier. That is going to climb from about 162 million pounds this year to 206 million pounds in 2030, and to further to 292 million pounds in 2040. That is according to the World Nuclear Association. But the supply is going down. Supply is set to fall by 15% by 2025 and 50% by 2013, and that is due to lack of investment in new mines. Now, there are some idle mines, so if the price goes up significantly, those idle mines may restart production, and at some point the demand and supply may match in the market. Now, let's take a look at the two ETFs which help investors invest in this mining, in these uranium mining companies, because most of these companies do not trade in the US, and that is why ETFs are a better way of getting exposure to these international companies, and these are also small companies, and ETFs provide a better, lower risk exposure to these companies. So as I mentioned, Sprott has a physically backed closed-end fund which trades in Canada. We do not track it and it's not available easily to US investors. But if you want, you can visit Sprott website to learn more about uranium. They have a lot of good research material on uranium. Now, the first ETF that I'm highlighting is the older in the space. It is by Global X, the Global X Uranium ETF. The ticker symbol is URA, and it invests in uranium mining and nuclear component companies, has over 840 million in assets, a lot of which have come in the past few weeks. And it is cheaper of the two, which with an expense ratio of 69 basis points. Now, to learn more about this ETF, you can go to the quote page on Zacks.com. And from there, the Global X webpage for this ETF. And as I mentioned, a lot of these companies are international companies. So Canada accounts for almost 50%. Then Australia about 11%, and Kazakhstan, South Korea, Britain, Japan, US is just about 5% in the ETF. Looking at the companies, Cameco and all these companies, which I would say that I know very little about, but these are the top holdings in the ETF. The second one which I am highlighting is actually a much better performer this year. It has more than doubled this year. As I mentioned earlier, it is by North Shore Global Uranium Mining ETF. Ticker symbol is URNM, uranium, and it holds companies in the uranium industry. This is a little bit more expensive with an expense ratio of 85 basis points and has over 500 million in assets, which again, a lot has come this year in the past few weeks. Again, to learn more, you can go to the quote page on Zacks.com. You can read our articles and you can go to North Shore webpage for this ETF. Now, looking at the top holdings, Cameco, which we saw in the other ETF, to Gaza, to Chrome AD. Now, these are because they are not traded in the US, so that is why you see different symbols or IDs, because these are all international companies. Now, this also holds the Sprott Physical Uranium Trust, the closed-end fund that we talked about. And this also holds Yellow Cake PLC, which is also a company which buys and holds physical uranium. So it provides access to physical uranium to investors. Now, on the last slide, I have the comparative performance versus the S&P 500 index over the past 1 year. The North Shore product is up more than 170%. Over the past year, the Global X product is up more than 120%, whereas the S&P 500 is up about 35% over the past year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, our video channel, so that you do not miss anything. And I will see you next week.